Well, the number one gauge in the inflation on the consumer side of the equation just came out just now. And before we get to that, I want to give you a little bit of a caption what kind of led us to this point. So about a week and a half ago, a couple Fed people came out and started talking. One of the people that I really like to follow, he's the Chicago, he sits on the Chicago Fed. He came out and said, we might see the quickest reduction in inflation that we've ever seen in history. And this guy's been around for a long time in the financing and banking sector. So I put a lot of weight on what he says. So that made me kind of think, okay, what's going on here? But then what we saw is the stock market started to rally off his comments. And the bond market started to really take off, pushing down yields. We were at a 5-year, 10-year Treasury. The 10-year Treasury yield was about 5% about a week and a half ago. It's now 4.5%. It's tumbling. So what's behind the scenes on all this? Well, then the next piece of the puzzle we saw is latter part of last week, Federal Chairman Powell stepped in and said, no. If we see inflation still raising its ugly head, we're going to increase rates without a doubt. So I'm thinking, okay, one of the guys that I follow just said we might see the lowest inflation ever, in a month span or in a short time span. And then we have Federal Chairman Powell coming in and debunking all that. So is it a smokescreen? That's what I predicted. I even said that in my video yesterday. So let's go over and see what the inflation numbers actually came in today and how the markets are reacting to that. So let's go over to our economic calendar for today and see what these numbers look like. So what we followed today is the numbers that are out, or the CPI. CPI, just think of the C on the front end of that, is consumer inflation. So we have core CPI month over month. What they do with the core is they strip out food and energy, because food and energy, how many times have you gone to the gas station in the morning and it's $3.50 a gallon, and you go in the evening and it's $4 a gallon. So it's hugely volatile. So they pull out those numbers. That number came in previously at 0.3. Analysts expected it to come in at 0.3, came in at 0.2. Might not seem like a huge deal, but it is. Then we have CPI month over month. Last reading was 0.4. They expected it to drop down to 0.1. It dropped to 0. No inflation numbers right there. Now, year over year, here's the number that they're wanting to get into the twos. Last time we were out, the last reading was 3.7. They expected that to come in at 3.3. It came in actually lower than expected at 3.2. So all these are well below the analysts' expectations. So now it's like, okay, Federal Reserve Chairman Powell was all worried that the markets would overreact to this. So let's actually go over and see what the markets are doing. So if you go to right here to CNBC, what's the stock market doing? Holy shnikes. Stock market is up 350 points, exactly what the Fed didn't want to happen. They're like, we need the economy to cool off. This is actually just going to help the economy grow. Only time is going to tell. We have the S&P up 57 and the NASDAQ up almost 300 points. Good news in a lot of this too is oil prices are starting to come down. Remember about 2-3 weeks ago, we were almost teetering at $90 a barrel. I follow oil. The main reason I follow oil is it is the lifeblood of our economy. As the price of oil goes up, the price of everything goes up. Okay, so that's actually what's going on right now. Now, tomorrow, what we're going to have is some additional inflation numbers. We have the producer inflation numbers that's going to come out tomorrow morning, and we're going to see how these numbers come in. But based on this information, what's actually going on with mortgage rates? Well, they are rallying and rallying huge. What we follow on this channel is right up through here. Mortgage-backed securities. What is that? Well, this up here, the MBS, is a mortgage-backed security. It's a bond that trades on Wall Street. You might even have it in your investments. What's going on with this is we follow what's going on in the price of the bond, because what happens is if the price of the bond goes down, rates go up. So we've seen the price of the bond go down and down and down for the last 2 or 3 years. Now, all of a sudden, what does it say? If you squint over there, we have it's up 86 points. 86 points. This means we're probably going to get close to 0.3%, maybe 0.5% lower in rates today. So based on this information, the markets are rallying, the bond market's rallying, the stock market's rallying, pushing rates down, way down. So now, is this going to help spur housing? Don't know. But that is actually a catapult to get the housing market back on track. So let's go over to the housing market right now and mortgage rates and so forth. So if you're out there and you're actually trying to find your first house right now, this might be a pivotal point for you guys to say, okay, rates are off their 8% rates. Now they might be teetering at close to 7% here soon. I never thought I'd be saying 7% is a good rate. But if you're out there looking to buy your first home during this market, or you're out there and you've already locked in, you're supposed to close, maybe 30, 60, 90 days from now, and you're locked in with the bank, and you're seeing these rates plummet, and you're like, okay, you called the bank, and the bank's like, Sorry, you locked in. We can't do anything. We'd love to help you. Okay. So what we could do here is I work at a federal bank. Licensed in all 50 states throughout the entire country, but we're also one of the country's largest mortgage brokerages, set up with over 70 different lenders. How that helps me, how that helps you, is that if we lock you in at one bank, and let's say rates plummet like they're plummeting today, what we can do is we can actually try to renegotiate with that bank that we have you locked in at. But if they won't renegotiate a lower rate, we can say, okay, well, I'm sorry, but you're going to have to withdraw that loan because we're going to now move your loan to another bank that can give us these low rates that we're seeing in today's market. So that's what we do. So if you think you're locked in and you're stuck, you're not. What we'd ask you to do is go to our website, therateupdate.com, and right through here it says loan estimate. We want you to upload your loan estimate into there so we can scan the market and see, can we get you a better rate? Can we get you better fees, lower fees? Or can we get you all the above? We'd love to help you. Or you might say, Dan, okay, I'm starting to see rates come down. Now with these rates, maybe my house, the new house that I'm looking to buy might be affordable to me. Can I qualify? What I always ask you to do is don't disqualify yourself. Please reach out to us. We'd love to help. So again, go to the rate update. There's 3 ways to reach out to us. 1, you can just hit the apply now button right up through there, put in some information. What we're going to do is it's a little unique. We're going to ask you a few questions. Based on the answers to those questions, we're going to actually assign you to a loan officer on our team that specializes in exactly what you're looking for. Or you might say, Dan, can I actually call you guys or just email you? Well, yeah, absolutely. Go down to the bottom of our website and you're going to see a lot of information up through here. If you speak Spanish, we just added this not too long ago. You can click that and it changes everything into Spanish so you can understand what's going on behind the scenes. But you can go down through here and you're going to see a whole bunch of things like tell us about yourself, choose a plan, get your mortgage, find different products that are available to you, mortgage calculators that you might find really handy. But then if you go down to the bottom, you're going to find 2 different things right through here. 1, how you reach us by phone. It's an 800 number. It's 844-775-5626. Or if you'd like to reach out to me personally, my personal email is dan@therateupdate.com. And yes, I will be the one replying. So hope you find value in my channels. I told you guys the rates would start coming down and we're seeing those kind of plummet today. What tomorrow's going to bring, well, I'll put out a video tomorrow and let you know what's going on. Take care. Thanks so much for watching. God bless. See you tomorrow. Bye-bye.